All right, good morning, good morning. So like we talked about yesterday started out, we were bid up, we were up in the overnight hours. And the discussion was we were likely up in the overnight hours because of how far we had moved on Thursday and Friday. And it was very likely that we were looking at a dead cat bounce. Now, when it comes to, using fancy language and, oh, I don't know what that is. Well, think about a trend. And then when it pulls back and then you get a trend and then it pulls back and then you get a trend. That pullback right there is the DCB, the dead cat bounce. So this pullback yesterday, it was likely to facilitate nothing more than a reversion back to the mean, a little bit of linear regression, least squared method, and dot plot statistics. Yeah, use all that fancy nerd talk again. And if you remember what was on Finance Juice, it was, oh, everybody is now risk on because China, blah, blah, blah. This morning, it looks exactly like it did Friday, where it says everybody's in a risk off mood because blah, blah, blah. And it's the same thing. They just swapped a day. They have no narrative for why we were down Friday. They had no narrative for why we were up on Monday. And they just continue to rehash the same thing. People are worried about the interest rates and blah, blah, blah. That's exactly what is on Finance Juice this morning. Showing that absolutely nothing has changed, right? So as I mentioned yesterday, people had a warm, fuzzy feeling and they went with it, right? And then today, you flip all that around, people don't have that warm, fuzzy feeling anymore, and they dumped it back down. Now, if you look at what's on the agenda today, it's really a really light day. There's just not a lot on there. And that almost makes it worse. They know, investors and the institutions know that the Fed is on silent mode, and that precedes an FOMC meeting. And this isn't just any meeting, it's one of the quarterly ones. So notice on the European wrap exactly what we're talking about. A risk off mood swept through the markets amid fears of central bank tightening, blah, blah, blah. It's going to sap growth and, right? You want to look for that kind of language because they run out of crap to say after a while and they just start rehashing the same crap they said last time. Now, when you're really new, it's the first time you've read it, you don't know that that's the same thing they said last time. So I get that, right? But we got to begin to learn to recognize the narrative. I did hear something about Yellen speaking today. I haven't seen it yet, and I don't see it here on Finance Juice. But take a look around, see if you can find where she's going to be speaking or when she's going to be speaking. So that gets us through what happened in Europe. When you get up in the morning, it's worth taking a look around the world, kind of asking that question, what happened while I was asleep? One place to do that just at a glance, it's a really good job and it's free. I like free. Is a place called Koifen. This used to be a really great place when everything on here was free. Now you have to have an account to reach the good stuff. But one of the things that you can reach even on a free account is the headlines of what was going on around the world. If there's anything significant happening, it will be in here. It's likely going to be everywhere, but it's just a nice place to get a little summary. You can also catch things like corporate events, you know, see who's on earnings watch, things like that. Shouldn't take you long. One thing that I would caution you about is keep your eye on the side. Like here, only this top article is today. All of these other ones are from a previous day. And if you didn't catch that right away and you start scrolling, you can fall down the rabbit hole reading a bunch of junk that's days old and has no bearing on the immediate market situation or even in our current environment. All right, so just watch the dates and the times on the side. There it is, 9 o'clock, U.S. Secretary Treasury Yellen speaks. So it literally just updated. Somebody heard me talking out there. Like, shoot, I thought we had already put that in there. So there you go, guys. Yellen speaking, that would be 10 market time. This thing is reading my time zone. So market time, 10 a.m., Yellen will be out there chipping teeth. Yeah, you like it. All right, so like we do every day, we want to come into the market watch. I do this for a couple of reasons. If you're a day trader and you're going back to a specific day in history and you want to see if there was any econ for the day, you can come in, look at the morning briefing, and fast forward real quick to this part of the video and you'll see what the econ was for the day. I can't tell you how many times I've done that. I go back and I see something on the day, say 2 months ago, and I'm trying to figure out, was that a lunchtime move? Was it based on additional auctions? Hold on, and I'll just go fire up the morning briefing for that day, check the econ. It's kind of the missing link when you are trying to backtest or validate intraday price action and you don't know if there was econ that day. It is a really light schedule. This IV PMI is Canadian, not US. That doesn't mean that it can't have an impact. Just we won't be using that data. There really isn't any data that we're going to be using or the Fed is going to be using until Friday, those CPI numbers. Just, a little something to keep track of there. So as we do every day, I want to start with the S&P. We are at the bottom of the range, 40, 60-ish. Now, as usual, want to kind of break things down into the 3 scenarios. Are we inside day or are we outside day? And if we are inside, do we have any expectations that we will go into an outside day? So as you can see from the box drawn, we are outside of yesterday's price action. We may get back inside there though. So normally this is where we talk about what the range is, the size of the range, maybe break it down into quadrants, but we are already outside of the range. What we do want to talk about now is what's the likelihood that we could rally back up through that range and actually break out through the top of it. If we were to do such a thing, we would need to get through a few pivot points. One would be the low of yesterday. And one would be the close of yesterday. Our own Globex high, where we opened in the RTH, where we opened Sunday night, which looks like it ties in really close to the low, because that was that gap close at the end of the day yesterday. So it's not really worth marking that one. Globex high and the RTH high of yesterday. I seen some talk about acronyms the other day, how there are a lot of them, and there are. Try to just jot down some notes a little bit at a time. RTH, regular trading hours, right? It goes on. And depending on who you're talking to or which group of people you're talking to, they may say something like OOD or OOW. There's a lot, guys. There's absolutely no argument on that. There are a lot. But if somebody gives you a cheat sheet of those, you're not going to get really far. It's not your cheat sheet. It's somebody else's cheat sheet, and they gave it to you. You will find that if you do the work yourself, it sticks better. So you can start with their cheat sheet and then kind of expand and make it into your own, right? Just a little bit at a time, you will grow into an entire list of those things. So what is the likelihood that we can make it all the way back up to the top and out through the top of yesterday? And is that even within our own range, our own ADR for the day? 2.2, and we have an ADR of 2.5. So from our lowest point of the morning, and we're off of that low, we could easily make that distance. Remember, for the moment right now, we're just trying to get back to zero, back where we opened up last night in the Globex, and we're only down, about 0.75%. So we could easily reclaim that 1% or 0.75%, and then begin a push to the upside from there. 2.5. And that would get us through the top of that range from that holiday bop to the upside. $42.11 would be my upside target. It's a significant cog line, COG, center of gravity. For us to make it that far, we would still need to resolve that Globex high from Thursday into Friday. It would possibly be worth marking out the close. That'd be the Thursday close. And all of that is in our way if we're going to be moving to the upside. We did reach a critical low this morning. Critical from the idea that we've been maintaining in this range since last Wednesday, and it has managed to hold the line. Should that line break, we're going to begin focusing on the larger range. All right, so this has kind of been our area here. Back up just a little bit more, however. And you can see that around 3,800 is the real low of this move, right? Now, when we're focusing on technicals, higher highs, higher lows, we had set a higher high the other day, and these are now lower highs. It's very likely we're going to roll over. But it really comes down to the low. Are we going to get a lower low or not? 4031 is a new cog that has been added. When it comes to the cogs, we almost always just use the 11s. Whether it's been validated or verified or not, we just automatically base one at 11. But you can see that there are some really old cogs that have been around for a long time. Now, obviously, we haven't been down there for quite a while, but we don't take them off. They still exist. Those are validated, verified cog levels. Recently, 4031 has been added to that list. So it's one that will stay now always. So unlike the 11s, which is what we kind of just throw in there without actually validating anything. This one has been validated and verified. All right, so we're looking at the point of control, 10-day, 30 minutes. One thing to note is the size of the volume profile, and also recognize that there's a very large shallow area underneath us. So if we were to break to the downside today and get below 4060, there's nothing to lean on all the way down to the value area low. And that would be 39.75. We wouldn't really look for much support because there isn't any. When we look back into this Thursday and Friday, it was right before that holiday. We can see that there's a little bit of volume here, but it's not enough. It's not significant enough to have any real validity to it. So we can point to it and say, oh, yeah, there's a little bit here, but I wouldn't lean on it like a handrail. We don't start getting into any real support again until you actually do get near that value area low, right? Into all of this. Which is important. It's why we come out to this level and we take a look around. Otherwise, when we're just drawing lines and connecting points, if it's not an institutional pivot point, and if it also doesn't have any volume behind it, then it's really hard to kind of validate and say that that's going to provide any kind of insight. It's the hazard that comes with just drawing lines at turning points. In that discussion of the upside move, yesterday's point of control has already been hit, but yesterday's value area high has not. So if we were carrying forward points of control and value area high and low, then we would want to bring that one forward. We are a significant distance away from our own point of control for today. And it's always worth asking the question, where is the floor pivot for the day? Not only are we underneath the daily floor pivot, we are also underneath the weekly floor pivot. And so far we have an MDP, that's a missed daily pivot. A missed daily pivot is a trade strategy designed around the floor pivot formula. You can do it on a daily, a weekly. It's worth looking into if you haven't heard about that. John Person, I believe, is the guy that came up with that strategy. And if you're on Thinkorswim, just type in his last name and you will see Person Pivots. The PMC, the PPS, the Person's pivots, all three of those were designed to be used together and are based on John Person's concepts. So we talked about an upside move, but we didn't talk about the other scenario, which would be a downside move. Which, by the way, if we start working our way back up, we will be back inside of yesterday's range. So it will be an inside day breakout failure. So a move to the downside. We've got an ADR of 2.5. So theoretically speaking, we're only down 0.8. We have a considerable distance that we could travel, and it would not be considered unusual. So from the close of 4, $2.5 would get us very close to 40.11, center of gravity. If we continue this move to the downside, that would be my first target. Notice I said first target, not destination. The ADR is the least of what we could do today. If we expect things to get extreme, we would take that current ADR and add another 50% to it. So you take 2.5, cut that in half. It's 1.25. Add 1.25 to 2.5, 375. So if we walk this back to 4 o'clock, measure out 3.75, and it gets us really close to call it 39.60. That would be our low side move for the day. And even that doesn't have to be everything, right? Remember, if things get extreme and we run into no bids and it's just fallen and there's nobody taking the other side, every single firm out there going short, then we can travel a long ways. It has a lot to do with the algorithms too, when it comes to stock and options trades. So those firms will go out and run strangles and straddles and build these options positions, and that leaves them exposed to delta. Same thing with the market makers, they're exposed with delta. One way that they can get delta neutral is to trade futures. Futures have a hard delta. Unfortunately, if we start to expand too far in one direction and they need the deltas neutralized, if we're going down, they will sell more. They'll sell more to get to delta neutral. But unfortunately, their selling would cause us to go down even more. And of course, if that makes us go down even more, then they're no longer delta neutral and they'll sell even more again to get back to delta neutral. And it would just continue to push the market down, 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 down. That can often be what they call the volatility box or the hurt locker. We've seen that in 2018, and it ends at the end of the week because they're often trading from Friday to Friday with those options trades and no longer needs hedged after the end of the week because the trade is gone. You start over again. The same works to the upside, by the way. If we were to expand too far and surpass their positions, getting into an extreme delta level, they will buy into buying, driving the price higher to get back to delta neutral. They'll buy more, which drives the price higher, which knocks them out of neutral, and they'll buy more. It's a vicious circle. If you want to understand more about that, there was an article written on Bloomberg that talked about dealer gamma hedging. And that's a really That's a really good article. They kind of dumb it down a little bit, and it's not like I'm saying that we're all a bunch of dummies and we need it spoon fed to us, but it does help when they get rid of a lot of that financial talk and just give it to us in plain English, right? We don't need the bank speak. It is very likely that we're going to hold the range. Having said that, any news from Yellen today, and she's kind of put her foot in the pie a little bit. Anything out of her that rocks investors out there, gets them to reevaluate our current bias, we could see some significant moves on the day. So definitely pay close attention to what she has to say, and keep in mind, she's basically the only thing on the books today. So she's going to be garnering a lot of attention. This really feels like a market looking for a reason. All right, we got the same thing going on with the NASDAQ. We are inside day breakout. And so far, we're maintaining. We do have a TRB here, just like we do with the ES. The likely theory is that we go back inside of the range from yesterday. Notice where price stopped this morning. At this low from way back here. Institutional pivot point. Open, high, low, close. Now, did we know it was going to stop there? No, right? We could have an idea. We could have a theory. We could anticipate a reaction in price when it got to that level. But did we know for sure that it was going to hold? No, absolutely not. It doesn't promise that. And in fact, the way that Dalton would say it, or maybe Reznicek, is that this would be considered a weak low. The fact that it stopped on a dime right at that location within ticks of that pivot point brings in the idea that it's a weak low. That gets more into like TPO charting and TPO profile. And so it's a little in depth for people that don't use that thing, but yeah, it's worth looking into if you're going to be a pivot point trader. So we have a 3.5 or a 3.45 ADR, and we're down about 1%. So we could add 2.5% to this move to the downside. And that would just get us into the norm of the day. Gets us really close to the ADR that we had the other day. We're going to move that thing up to the 50. Should we get back inside of the range from yesterday, we'll look at where we closed. Make a move up 3.5. And that gets us up to 13,025, another round, another quarter. So there's our range for the day. And you can see that if we were to tag just the ADR, we would be out of the range from last week to the upside, or we would be out of the range to the downside. this being the range that we're focused on. You want to recognize the size of the volume profile, realize that it's a pretty significant or a pretty wide profile still. We're not too far away from the point of control. And other than some slight volume around 12,300, that's all we got. If we get to that ATR target, there's nothing there. We're very likely going to go right through it. And we won't find any volume support until 11,975 area, which fits into that argument that says ADR would be the minimum of the move. It'd be our least expectation. We are in basically the middle of the box. When we're at the high, we expect to go to the low. When we're at the low, we expect to go to the high. So when we're in the middle, we could go really any direction. It's a coin toss. We could carry forward the value area high from yesterday on the NASDAQ, just like we were discussing when we were looking at the ES. Remember, just like with the ES, if we were to take a move to the upside, there are a lot of pivots in our way. It's very likely going to be a choppy, rough move back up, or there'll be some kind of news and a catalyst, and it will be very, very large candles, just big expansion candles all the way up. This is why we say if we're trading inside day, it's very likely going to be a choppy one. If you remember what yesterday afternoon felt like, or Friday afternoon, when you're sitting inside of the previous day's range, a lot of times you're just getting chopped up. Of course, you can always find an example where that wasn't true, and the ranges have been significantly wide, so there's plenty of room for a trend within that day. But it's a question I get all the time from people. How did you know today was going to be junk and you sat out? Because that's what I tend to do. I just tend to go trade something like options rather than try to trade futures. Options can benefit from a market that isn't going anywhere. Well, how did you know it was going to be that and that you should go trade options and not trade futures? One of the first things that I look at is where yesterday is, and are we inside of that range or outside of that range? It's not a perfect solution. There's been days where we're inside day and I think, yeah, we're not going to go anywhere. And we make a beautiful, nice trend day inside of the previous day's range. So, you know, it's not perfect, but more likely than not, if we're sitting inside of yesterday's price, it's going to be a difficult, choppy, ranged mess. Even these very large liquidation breaks yesterday would have been difficult to trade. Doesn't mean you can't trade there. Just if you're already losing or if you're not yet winning consistently and you're trying to find a way around the losses, quit doing the hard stuff. Start doing the easy stuff. Sounds simple enough, right? So for today, if we do start working our way back up, we would need to get through yesterday's lowest point, our own Globex high, the 4 o'clock close, the Globex open from Sunday night into Monday, there's the open from Friday, Globex high, and the open of yesterday. Now, it's very likely, if you zoom in, that you could find some pivots in these two wider areas. And there's this old phrase that says, if you draw enough lines, price is bound to hit one of them. Kind of hate that phrase. But the idea isn't that we mark these lines and we think price is going to go right there and stop. They're more like signposts that we would mark those lines and consider what the reaction of price should be when it gets there. And if it doesn't react or it doesn't respond, that's fine. But it gives you a spot while you're looking at the dome to see if there's liquidity building up or transpiring around that range, right? Look at what's on the bid and what's on the ask. And are those levels being defended? Are they continuing to pull and stack on those levels? So it's not like we would just put an order there and hope that it all worked out. They're just areas of interest. But they are also institutional pivot points. Unless you just start randomly going in and marking off these other pivots, the ones that we have marked are institutional. The close, the high, the low, Globex open, RTH open, Globex high, RTH high. We were getting a lot of influence out of the dollar yesterday. We want to continue to watch for that today. That break right there, when I was running my report and looking at, what could we do? The game theory at the time was, if the dollar breaks through that angled resistance and makes a move to the upside, that it's very likely the S&P is going to go the other direction. So if the dollar was to go up here, then the S&P was likely to go down there. And that was exactly what happened. If you try to line up what we were doing yesterday, it was right in this nice push to the upside, and then it just rolled over and dumped down on our heads. A little bit of warning because that dollar was breaking out. That's about all we had. So it wasn't perfect, but it was better than nothing. The internals yesterday were not very helpful, not very useful. There was a significant breakdown in Bitcoin last night. I want to watch that this morning to see, if it's going to start turning around. This isn't like a teeter-totter. We don't look at Bitcoin and see it going down and think it's going to make these other markets do anything at all. It's not the way that it works. Instead, we focus on Bitcoin more as a very risky asset. And if they're getting into that, it's because they're suddenly starting to feel like taking risk is a good thing today, right? It's why we call it a risk on, risk off environment. We continue to see oil moving around. Keep your eye on that. It is absolutely worth your attention. Yesterday, I mentioned something about September and the Fed choosing to pause. And then I shared a post in the after hours that kind of followed up on that. And it kind of makes the argument that we're not going to see a pause. So if we are looking for that pause in September, which absolutely would cause the market to rally to the upside, then we're going to need things like as long as the labor market stays strong, as the ADP and the non-farm payrolls show up, then the Fed will continue to tighten. As long as inflation is sticky, looking at, say, rising energy, rising food, rising housing prices, they're also going to continue tightening. And as long as That's it. No, it's going to be just those two. So, kind of keep in mind the data that we're waiting on goes directly to the heart of this one question. Are they going to blink, back away, and put a pause on raising rates? A lot of institutions out there are already saying that the Fed doesn't have the stomach for it and that they're not going to continue to raise rates. That they're going to call a pause and say, well, we've done quite a bit. Let's see what happens now. Let it coast for a little bit. And let's see the fruits of our labor. We have the 3-year note auction today. When we're talking about the Fed reducing their balance sheet, they just started doing that runoff. We don't know the impact of this. There's not a lot to look back on in history and say, oh yeah, when they did this last time. This 3-year, we got the 3, the 10, and the 30 this year. So today's the 3. It's a really important one. It's at 1 o'clock. And make no mistake about it, it is very, very likely going to cause a significant change in market sentiment today. If you were to go to FX Street or one of those places where they gauge the level of impact for these additional auctions, I'm sure it will show up as a very light impact. They'll very likely say, oh no, historically speaking, this auction has no real impact on the day-to-day of the market. Not today. I always point out these additional auctions because they are game changers for the midday reversals. Today, 1 o'clock, buckle up. Buckle up and be ready for some fireworks. I got a sleepy cat trying to push buttons on the keyboard. Sorry, I couldn't resist. All right, so no surprise, almost every single sector is down today. It's a little bit of mean reversion from yesterday or a continuation from last week. We're just working our way from the high of the range to the low of the range to the high of the range to the low of the range. This morning, we're back into energy, natural gas, gold, bonds, oil. Marijuana is up this morning, or maybe is still up from last night. It's a distinction that TrendSpider really doesn't make. We have to make it ourselves. So no, that is this morning, but it's one single print, doesn't hold a lot of validity. If we look at the pot stocks this morning, sure, there's some that are up, but just as many are down. So not a lot of swap there. Keep in mind with a high correlation coefficient, when everything is doing what SPY is doing, 8 out of 10 and 9 out of 10, you got to kind of ask, what are the 1 or 2 companies that are not doing what SPY is doing? And is it because they're in a different category altogether? Or is it more about did they have a earnings or, you know, news of their own, their CEO is arrested or something like that. So when we're breaking it down, if most of the market is bearish, what's bullish? Bonds, precious metals, volatility, commodities, something, right? Instead of trying to go in there and hunt for one or two names doing the opposite of what everybody else is doing, like one up name in the chip sector or one up name in the financials. Look at the capital rotation that's going on. Friday, everything was down but energy. Yesterday, I mean, energy did turn around a bit, but when we started out, we had a lot of sectors that were doing good, and energy wasn't one of those. So it's just that rat race from bouncing to the sector that did good yesterday, likely to not do good today, and then likely to do good again tomorrow. And they're just rotating it out. When we look at the things that are down, we want to focus on how far, up or down. I like at least 0.5%. And when you're using the pre-market change percent, you have to be very careful of the broker or the app or the platform that you're using. Make sure it distinguishes between, hey, is that an after hours print? Did it happen, you know, like last night before 8 o'clock? Or is that a pre-market print? Did it happen after 4 a.m. this morning and closer into the 8 a.m. time frame? It's interesting that silver's down, but well, I was going to say, but gold isn't, but I guess there are some gold ETFs that are kind of flat. So every single sector that we would want to focus on for the S&P legacy sectors, they're all down this morning. And that leaves us kind of hunting around trying to find something else. There are a few energy names like the natural gas, but you know, even those bonds they're looking really soft, right? Not really getting a lot of traction. And yesterday we had stocks and bonds moving in the same direction in a significant move. It's not that bonds can't move with stocks. It's just historically it doesn't move with stocks, right? So then we get to focus on that question of when what should happen doesn't. As you can see on the list here, there are names that are green. There always are some names out there somewhere. But you want to focus in on what names are they, like Baba's up this morning. Off of its high, but still up this morning, right? And that fits in with the internet stocks from, you know, the whole China crackdown and then the easing. And if you look at the high, the anchored VWAP, I know it's kind of hard to see. There's a white line there. And that anchored VWAP is based on the highest volume level for this chart time frame. It just does it automatically. I didn't pick that spot. And the one on the other side here, the one on the left side, that is anchored basically at the start of yesterday because it was the highest volume. And that's where these anchored VWAPs, you got to kind of be careful. Of course, it's the highest volume. It was the open. And it was the start of the week. So not much of a surprise that that's where the anchor is at. But either way we hit it, yesterday we managed to not break through it. We do have a very large candle now causing a shadow. So we're inside day, but an inside day this wide doesn't have a lot of validity behind it. All right, so when it's all said and done and we step back, kind of look at the bigger picture of what we have going on this morning, carry the narrative. This is a critical low at a major support. And if that fails, it is going to change the dynamics of the rest of the day, right? And on a significant level, it's not just, oh, well, we want to find a pattern, a setup, you know, it's a falling wedge or a falling channel, and we're looking for an upside break. Take it beyond that. Look at the bigger picture, the idea of what today represents and that low represents. Keep your eye on the clock today. Watch the speakers. Keep your eye on the internals. Look for a change at lunch, right? Or after lunch at 1 o'clock. That's going to be a big one. Everybody have a good one. And I'll see y'all tomorrow.